Good afternoon. My name is Kim Stanger. I'm the co-chair of the Health Law section for Holland and Hart. Welcome to today's webinar. This is part of our series of free webinars that we provide to our clients and friends on different healthcare related issues. Today we're going to be talking about the use and documentation of the provider relief funds. A couple of preliminary matters. Our discussion today is going to focus on the provider relief funds, those certain tranches that went out to different providers. We're not going to be talking about other programs that may be out there too, including the Care for the Uninsured and things like that. If you have questions during the program, please submit them using the chat feature, or you can email me directly and I'll respond offline. We're recording the program today, so as a result, we're not going to take questions during the program, but I'd be happy to respond to questions offline. If you did not receive copies of the slides and the materials, just contact Laura at the email there on your screen and she can make sure that she gets them to you. As far as resources we provided for you, actually we haven't provided the website, but the best resource out there, and about the only thing that we've gotten from the government, is their website dealing with the Provider Relief Fund. The website's right up there. It's got the general information you might need. It contains the attestation portals that you need to use in order to attest to the receipt of the funds. It also contains the links to the terms and conditions, and it also contains the frequently asked questions that the government is publishing and is periodically updated. We've also given you a PDF version of the latest version of those FAQs that came out, I believe it was June 30th. We've also provided you with a distribution fact sheet dealing with the upcoming Medicaid CHIP distribution that's going to be coming down the pipe. That only applies to those who have not received the general distribution funds or are not eligible for those. In addition, I provided you with an article that I did on the use of the provider relief funds. If you want to access more information about the provider relief funds, there it is. There's the website that you go to. Down on the left, it's got all those tables or all those links that will take you to additional information. That's really the best guidance that we've got so far. And I'll be honest with you, we don't have a lot of guidance when it comes to the use of these provider relief fund distributions. By way of background, as you know, in the wake of the COVID pandemic, the government was really anxious to get this money out to providers. And so suddenly, as a surprise to some of you, you may have opened up your bank account to see that you suddenly had thousands or hundreds of thousands or millions of dollars in there that came from the federal government. And a lot of those funds were distributed really before they had processes or guidelines in place in order to tell you what you're supposed to do with them. And the government is still trying to work out those details about dealing with those provider relief funds. We're going to go through today the guidance that we have been given, and I'll give you my best thoughts on kind of where we're going to go and what you need to do to protect yourself in the meantime. A little bit of background, as you know, there's basically two kinds of distributions that went out. First, it's the general distribution. This is the one that went out, $30 billion, went out on April 10th to Medicare providers who participated in Medicare fee-for-service in 2019. In order to be able to retain that, you had to provide care to possible or actual COVID patients after January 31st. That should be January 31st, 2020. That was followed by a second tranche around April 24th for a total of $50 billion. In addition, there's a series of targeted allocations. The first general distribution went out to all Medicare fee-for-service providers. The targeted allocations went out to certain types of providers. There were some that went to high-impact distribution, primarily hospitals and high-impact areas. There was an additional tranche that went to rural providers, including hospitals and rural health centers and the like. An additional tranche went to safety net hospitals. An additional $4.9 billion went to skilled nursing facilities. And then $500 million went to tribal hospitals and the like. With each of these tranches, whenever you get money from the government, there's always strings attached. So we're going to talk about some of those strings. Some things to remember about these program distributions. This is really unlike anything you've ever gotten in the past. This is not a loan. It's not like the PPP program. It's not like the advance payment program. These are grants that just come to you, and as long as you can comply with the terms and conditions and use the funds for the appropriate uses, you can go ahead and retain those funds. This is not an entitlement program. It's not like you can demand to receive these funds. You either got them or you didn't get them, and pretty much that's it. You don't have much of a choice about if you didn't get them, whether or not you can go out and get them now, because a lot of the distributions have already been made, at least under these programs so far. The payments may not be fair. The government was anxious to get this out, so in general, it did not apply to some kind of application process. Instead, they sent out the money in advance, and then you had to attest afterwards that you can comply with the terms and the conditions. So now that you got that money, your retention, your ability to retain and use those funds, depends on whether or not you satisfy the eligibility requirements and whether or not you can comply with the terms and conditions that we're going to go through. Primarily, you need to make sure that your actual COVID-related costs and expenses exceed the amount of the money that you're going to receive or retain. It's really not, the issue is not whether you got the right amount in the initial distributions. The question is whether or not you use that money for permissible uses that we'll talk about in just a minute. There is no appeal process. This is kind of like, you get what you get, and be happy with what you get, because there's, at least right now, pretty much the distributions have already been made. If you think that you deserve more, well, sorry. The government has said there is no appeals or dispute process. HHS is not taking direct inquiries from providers, and there is no remedy or appeals process available, at least short of the courts, I guess, if you wanted to try to sue them. But the government was, again, anxious to get this money out to you. They probably feel like you guys should be grateful for the money that you got, and there is no appeal process if you think that you did not get enough. You're stuck with what you got. Along those lines, if you're wondering whether or not you're better off receiving some money now or foregoing some money now to participate in a later distribution, don't do it, because there is no promise concerning future distributions about what you may or may not be able to get. So if you got the money now, you're better off using it now than trying to wait for something that may come down the pipe or likely won't come down the pipe in the future. In the most recent FAQs that were published, the government said that providers should not have the expectation that they will be advantaged by applying for funds from one distribution over another. Providers should apply for a provider relief fund payment in the first distribution in which they are eligible, because if you wait, you may not get it later. So take it while you can get it. If you receive that money, even if you've already got it, you are required to go in and attest to the receipt. So all recipients retaining PRF fund payments must attest to the receipt of the funds and agree to the terms and conditions associated with that distribution. You do that by going to the attestation portals that are on the government's website. There's different attestation portals depending upon the distribution that you received. And you have to go through that process of the attestation. It will guide you through the questions that are asked, and you have to submit certain information. Now, if you retain the funds for more than 90 days, you are deemed to have agreed to the terms and conditions that are associated with that attestation, even if you don't attest. If you don't want to agree to those terms and conditions, then you need to return the money. And because you need to return the money within the 90-day period. Otherwise, you're deemed to have attested to those terms and conditions. The first general distribution went out on April 10th. That means the 90th day for returning is actually today. So if you don't want that money, then you need to return it today if you can. The second general distribution, the second tranche, the $20 billion, went out on April 24th. So the next date to attest, the deadline for attesting there, is July 23rd. 2020. The other targeted allocations went forth in different times. If you reject the funds, then you need to complete the attestation to indicate rejection. So you need to go in there and go through the attestation process and tell them that you don't want the money, thanks but no thanks, and therefore you're returning it. Each of the different distributions that you may have received, some providers may be eligible and have received money under different distributions. Each of those has a separate attestation process, so you need to attest for each of the distributions that you received. Now, it may be you think, well, gee whiz, I'm afraid of making false statements because we're going to talk about some of the penalties that can arise if you do make false statements, so I don't want to attest. Can you just keep it without attesting? Well, I guess so. The government says that they require everybody to attest in order to keep it, but they really don't say what happens if you fail to attest other than if you keep the money after the 90-day period, you're deemed to have consented and attested. If you attest, as part of that attestation, you have to attest that you're going to comply with the relevant terms and conditions that are associated with the distribution. There's a list of those terms and conditions, the strings that are attached to accepting those funds and using those funds. Now, the terms and conditions for all of the PRF funds that we're talking about today are generally the same. There may be some very minor differences, but for all intents and purposes, I think that they're generally all the same. But remember, it's not just those terms and conditions that you're attesting to in the attestation portal. The terms and conditions have kind of an interesting statement that you have to comply with these terms and conditions and any other relevant statutes and regulations that might apply. Well, what are the other statutes and regulations? Well, we don't know. Those may be existing. Those may be coming down the pipe. We don't know exactly. So basically, you're agreeing to comply with whatever the government may put in place in front of you. So the bottom line there is you need to continue to monitor your compliance, monitor the guidance that comes down from the government and the regulations, the strings that are going to attach as we go along. Let's talk about some of those terms and conditions. Perhaps the most important one is your eligibility in order to receive that money. As part of the terms and conditions, the recipient must certify that on or after January 31st, 2020, they provided diagnosis, testing, or care for individuals with possible or actual cases of COVID-19. That is the linchpin of being able to use that money. In order to get that money, you had to provide care to patients on or after January 31st, 2020. Now, this was a hot topic because a lot of people said, well, gee whiz, I'm a dermatologist or I'm another specialist and I really don't deal with COVID cases, and yet I got all this money. Can I keep that money? Well, the government in their FAQs has confirmed that the care does not have to be specific to treating COVID-19. Instead, HHS broadly views every patient as a possible case of COVID-19. Remember that you only have to have provided diagnosis, testing, or care for individuals with possible or actual cases. Well, if HHS believes that every patient is a possible case of COVID-19, so really it appears that the test is whether or not you provided any patient care to any patients on or after January 31st, 2020. The care doesn't have to be specific to COVID-19. Now, this reference to possible or actual cases is different than the balance billing. The balance billing requirements that we'll talk about a little bit later, those depend on presumptive or actual cases of COVID-19. So the two standards are different. In order to satisfy that initial standard, in order to be eligible and receive and use the PRF payments, you only have to be involved in the care or treatment of possible or actual cases of COVID-19, which is basically the care of any patients, whether or not it's COVID-related. So it appears that those specialists, even if they don't normally treat COVID-19, they can still use or keep the money, or they can use the money, but they have to satisfy the other terms and conditions, including the proper use of the money that we'll talk about in just a minute. Well, what happens if you sold or ceased operations before January 31st, 2020? Remember that the tranches for the general distribution that went out and really the targeted distributions also were really based on historical submissions to Medicare or in some cases Medicaid. So they really were based on what you did in 2019, in some cases 2018. Well, what happens if after 2019 and early 2020 you sold or ceased your operations, but yet you got all this money in your bank account? Can you keep the money? No. In order to be eligible, remember, you had to provide patient care on or after January 31st, 2020. So if you ceased operations or sold your business before January 31st, 2020, then you can't satisfy that certification and you would need to reject or return the PRF payments. In addition, a seller may not transfer the PRF payments to another entity. We'll talk more about that in a little bit. If you sold or ceased your operations after January 31st, 2020, can you keep the money? Well, yeah, you can retain the payments if you can otherwise comply with the terms and conditions, meaning that you had COVID-related expenses or you're using it for COVID-related purposes. But you can only claim that you were using for COVID-related purposes. If it was an equity sale, you sold your practice after January 31st and it was an equity sale, well, the business still stays in business, right? It still continues. The business still exists, and therefore the PRF payments would remain with that entity, and therefore it can continue to use the payments. On the other hand, if it was an asset sale, you sold your assets to another party, you may not transfer those PRF payments to that buyer. The seller may use the funds if the seller was eligible and for any COVID-related purposes that they can justify, but they can't transfer those funds to the other entity so that the other entity can use it on its continued operations. Instead, the buyer would have to reapply or apply for additional distributions if any are going to come down the road. As part of the terms and conditions, the recipient has to satisfy or certify that they're going to use the PRF payments for permissible uses. This is the most important part of the terms and conditions. You've got to satisfy that the payment will only be used to prevent, prepare for, and respond to coronavirus, and that the payment shall reimburse the recipient only for health care-related expenses or lost revenues that are attributable to coronavirus. The money that you got from the government, you can't use it for anything that you want. It was sent out in order to address coronavirus problems, either to allow for the care of providing coronavirus care or to cover the expenses that were associated with the coronavirus. It has to be used for a coronavirus-related purpose. Let's talk about what those purposes are. The first is you can use it for healthcare-related expenses to prevent, prepare for, and respond to COVID. Now, the government in their FAQs recently gave us some helpful direction what they mean by that. Well, they said these are examples. This is not everything that you can use it for, but these are examples of permissible uses. Things like supplies and equipment to care for possible or actual COVID cases. So if you needed to go out and purchase a lot more PPE or certain drugs or things like that, then you would be fine. For workforce training in order to respond to COVID-related situations. Developing and staffing emergency operations centers. If you're a hospital and had to have your tent out there and in order to address potential COVID surges, well, then that would be covered. Reporting COVID tests to federal, state, and local governments. Constructing temporary structures to expand capacity for COVID areas or non-COVID cases, handling non-COVID cases in a separate area. Acquiring additional resources, for example, additional facilities, leasing additional space, obtaining additional equipment, supplies, staff, and technology to preserve or maintain care, and pretty much anything else as long as it was done in order to prevent, prepare for, or respond to COVID situations. The CARES Act itself, this is in the PRF FAQs, but in the CARES Act itself that authorized the PRF payments, they said that the PRF payments could be used for building or construction of temporary structures, leasing of properties, medical supplies and equipment, including personal protective equipment and testing supplies, increasing your workforce, so if you had to go out and hire new additional staff, workforce training, emergency operations centers, retrofitting your facilities in order to be able to address COVID situations, and taking other steps that were necessary in order to ensure that you had sufficient capacity to handle surges. The key there is, for the first issue is, okay, did we have expenses that we incurred in order to prepare ourselves or to provide actual COVID care? The second aspect is the government will also allow you to use the PRF funds to cover lost revenues that are attributable to coronavirus, even if they are not directly caused by COVID situations. But if, because of the coronavirus, you suffered decreased revenues, for example, due to fewer outpatient visits, elective procedures or services, maybe you had increased uncompensated care because people were showing up for testing or other types of services. You had additional employee or contractor payroll expenses because you had to hire new people. Maybe you had additional employee health insurance coverage or benefits that you had to provide in order to protect them for COVID-related expenses. If you had those expenses, you can also use your PRF money to cover those expenses, those lost revenues. You may also use the funds to cover what the lost revenue would have otherwise covered. So you lost revenue, and because of that, you don't have the revenue that you need because you don't have outpatient procedures, or you canceled all your elective procedures that reduced your income, but you can use that money that you received from the government in order to cover the expenses that you would have otherwise had, but for coronavirus, including payments that could go to employee payroll and benefits, your rent or mortgage payments, the equipment lease payments, or your EHR licensing fees, or other typical expenses. Again, the costs do not need to be specific to providing care for possible or actual COVID patients, but they just have to be linked to COVID, the effects of the COVID pandemic, including your decreased revenue because of the cancellation of elective surgeries or the like. The providers may claim the expenses incurred at any time, so it's not like you've got this window of opportunity. You can claim any of those expenses that you incurred at any time. Now, that could even be, going back as far as you want, I suppose, as long as you can justify that it was really COVID related. In their FAQs, HHS has said that they're going to question any kind of claims for use of funds before January 1st, 2020, because we here in the United States, for good or bad, really weren't doing anything in order to prepare for COVID. So if you're going to claim any expenses from 2019, the government may take a close look at those. On the other hand, going forward, you may use those PRF payments for as long as you have eligible expenses or lost revenue. It's not like you only have 6 months in order to claim this. You can put that in the bank account for as long as you need it, at least through the length of the pandemic, and then use those funds as necessary as long as it's for a COVID-related use. There is no specific window of time for the use. If at the conclusion of the pandemic, the providers have leftover PRF payments that they cannot spend or on permissible expenses or losses, then you're going to have to return that money back to HHS, but we don't have the directions yet on how that is to be done. The government in their FAQs has said that they will provide directions in the future about how to return those unused funds. The bottom line here is that if you've got that money, even if you can't use it now, if you think you may use it in the future, then you put it in the bank account and use it as necessary so that you've got it if you need it, because you can't guarantee, there's no guarantees that you're going to get additional distributions in the future. So, assume that this is it. This is all the money you're going to get, and so keep it and use it appropriately as you can. Well, those are the permissible uses. It has to be for COVID expenses to treat or diagnose COVID, or for losses that you sustain because of COVID. What are impermissible uses? Well, the terms and conditions specifically say that you cannot use the PRF payments to cover expenses or losses that have been reimbursed from other sources, or that other sources are obligated to reimburse. So you can't double dip. This was not intended to be some kind of a windfall for you. So if you receive money from other federal programs that are covering the costs, for example, you participate in the Paycheck Protection Program, and those funds get forgiven, so you don't have to repay that, well, then you can't use the PRF payments to cover that same expense that the Paycheck Protection Program would cover. If you decide to use the PRF funds for that, then there could be an issue about whether or not you've double dipped. You can't use it to the extent that there are other federal programs that would pay for it, maybe for payment for the uninsured. If you're going to participate in the uninsured program payment and you get payments from that, well, then you can't claim the PRF payments to cover that. It's not only federal or state programs, but it may also be private situations. We don't have a lot of guidance on this, but if, for example, you've got a contract that requires somebody else to pay you for those losses or cover the expenses, you can't necessarily look to the government in order to pay those expenses instead of that private source. You have to look to the other sources first before you rely on the PRF payments. So be careful about monitoring those expenses to ensure that you don't double dip. In addition, you cannot use the PRF payments to pay salary of an individual in excess of executive level 2 amounts, which are up to $197,000. You could use the PRF payments to pay salary of an individual up to $197,300, but you can't pay more than that. You could then use other sources in order to pay the salary above that amount, but you can only use PRF payments to cover up to the first $197,000 of that. The terms and conditions have a whole list of things you cannot use the PRF payments for. These are generally highly political uses of information, things like using it for abortion in certain limited, except in certain limited circumstances. Can't use it for lobbying, things like that. The most interesting I thought was you can't use it for the capture of chimpanzees, which I'm assuming is not going to be relevant to most of you. As part of the terms and conditions, how's the government going to check up and make sure that you're using this money appropriately? Well, you're going to have to submit reports to HHS. We have not got the specifics on how those reports are going to look yet. We're waiting for guidance concerning the reports. In the meantime, however, it's very important that you maintain effective documentation, so if and when those reporting requirements come out, that you can fulfill your reporting requirements. Don't assume that you can remember all this stuff down the road when you have to make the report later. You need to be documenting how you're using this money as you go along so that you can support it later on. In the terms and conditions, it specifically says that entities that received at least $150,000 must submit these quarterly reports, and that HHS would develop the documentation that you need, and then you could submit that. In the most recent FAQs that came out last week, the government said that's really not the case. In fact, recipients do not need to submit a separate quarterly report to HHS. They basically gutted the requirement in the terms and conditions. Instead, because it was a statutory requirement, the government said, well, HHS said that they're going to publish a list of all of the providers who received PRF funds. In fact, they've already published most of it, and the amount of funds that they received. And the HHS says that that satisfies the statutory requirement, and we're not going to require these additional quarterly reports, at least under that provision. HHS will send out additional guidance about the reports they are going to require, but that quarterly report that is mentioned in the terms and conditions, you don't need to worry about that right now. In addition, the terms and conditions require you to maintain appropriate records, cost documentation, and other information that's going to be required by HHS to substantiate the costs and expenses. And you've got to maintain those for 3 years from the date of the last expenditure. So the government will have at least 3 years to come after you to look at this stuff. You must promptly submit copies of such records if HHS requests it. And if HHS decides to come in and audit you, you have to fully cooperate with HHS in those audits. That's part of the terms and conditions. You agree, in order to keep that money, that you will cooperate with the government in those audits. As part of the terms and conditions, you certify that all the information you provide to the government is true, accurate, and complete to the best of your knowledge. That would be any statements or attestations that you make through the attestation process, any of the records that you submit through the attestation process, any of the statements that you make in the reports that you're going to have to submit to the government. You're going to need to make sure that all of that is 100% accurate. The government gives you fair warning in advance that any deliberate omission, misrepresentation, or falsification of any information may be punishable by criminal, civil, or administrative penalties. And we'll talk more about those penalties in a few minutes. As part of this, these terms and conditions, you also have to agree, or you have agreed to limit your ability to balance bill for patients who are out of network. Specifically, for all care for a presumptive or actual case of COVID-19, the recipient, you, the provider, may not seek to collect from the patient out-of-pocket expenses in an amount greater than what the patient would have otherwise been required to pay if the care had been provided by an in-network provider. So you're going to have to somehow determine what the in-network copay is, and that's what you're going to have. You're going to be limited in charging the patient that in-network amount. You can't just bilk them for out-of-network for whatever it is that you might want to charge them. You're limited in those in-network amounts. Now note, this is only for care for a presumptive or actual case of COVID-19. Remember that in order to get the PRF funds, it applied if you provided care to possible or actual cases, even if it wasn't an actual COVID case, if it was just a possible case. That's different than this standard. For the balance billing, it only applies to care rendered for a presumptive or actual case of COVID-19. And that's defined as a presumptive case of COVID-19 is a case where a patient's medical record supports a diagnosis of COVID-19, even if the patient does not have a positive in vitro diagnostic test result in his or her medical record. So if you're treating a COVID patient, a confirmed COVID patient, then you're limited in this balance billing. This does not limit your ability to balance bill patients who are not COVID patients. All right, those are the general terms and conditions. Well, what about if you've thought about it, you're 3 months into this thing and you've concluded that the money that you received, you were overpaid. You really don't deserve all the money that the government said. Well, if you're talking about a general distribution that you received, by the way, there's the formula for determining the amount that you should have received under the general distribution. The government has said if a provider believed that it was overpaid or may have received a payment in error, it had until June 3rd, 2020 to reject the entire general distribution payment and to submit the appropriate revenue documents through the Provider Relief Fund payment portal to facilitate HHS in determining their correct payment. So if you determine that you were overpaid or you should not have received it, you should have returned that back to the government by June 3rd, 2020. Now, if you didn't do that, what do you do now? Well, I guess you still call up their helpline and get the guidance that you need. We'll talk more about that in just a minute. Now, that's the guidance that we gave concerning the general distributions. Perhaps more interesting is the guidance that the government gave us with regard to the targeted distributions that were made. In those cases, the government said that if you believe you have received an overpayment and expect that you will have cumulative lost revenues and increased costs that are attributable to coronavirus during the COVID-19 public health emergency that exceed the intended calculated payment, then you may keep the payment, so long as you can use them for the COVID-related purposes. So even though you think that you were overpaid, you can still keep them as long as you can use them for the COVID-related purposes. The government goes on to say if a provider does not have or anticipate having these types of COVID-19 related eligible expenses or lost revenues equal to or in excess of the PRF payment received, it should reject the payment in the attestation portal and return the entire payment. This is really squirrely. Quite frankly, I still don't understand it. So the net result seems to be this. It goes back to that statement I made at the beginning. The issue when it comes to the amount of money you received isn't so much whether or not the government overpaid you in the distribution you received, whether or not you should have received that money. The question is whether or not you can use the money that they did give you for permissible COVID-related purposes. As long as you can receive the money that they gave you for COVID-related purposes, permissible COVID-related purposes, then you can go ahead and keep it. It doesn't really matter what the initial tranche was or how much money you should have gotten. If you can use it for legitimate COVID-related purposes, then apparently you can go ahead and keep the money and use it appropriately. On the other hand, based on this FAQ, if you can't use it all, then you're supposed to return the entire amount. Well, that doesn't make any sense at all. So let's say you're a provider, you've got $700,000 in permissible COVID uses that you can make, use it on legitimate expenses, but you got $1 million. Based on this guidance, you're supposed to return the whole thing. Well, that doesn't make any sense. The bottom line here, I think the practical effect is, I would take the position that you don't know exactly what your expenses are going to be until the end of the COVID pandemic. And therefore, retain the money use it as you go along. Make sure you're using it for legitimate COVID-related expenses consistent with the terms and conditions. At the end of it, if you haven't used all the money, then you can return what's left at that point. I'd be very careful about just simply returning the money right now, despite what this FAQ says. This FAQ to me just really doesn't make any sense whatsoever. Well, let's say that you got the money, but really you've done quite well. You haven't suffered any really losses because of COVID, so therefore you don't want to keep the money, or you don't think that you should keep the money. What do you do about that? Well, if you want to reject the PRF payment, you certainly can. You just use the Attestation portal, reject the funds. Note that let's say you think that you got 3 different tranches. You're eligible and receive money in 3 different tranches, but you really only are going to be able to use, the money in 2 tranches from 2 tranches. So that would cover your expenses. Well, you can then decide to accept those 2 tranches and reject the 3rd. You can accept or reject whichever tranches you want, so that you can keep some tranches, reject others. But just remember that once you reject the PRF payments, you cannot change your mind later and receive the rejected PRF payments back. Now, you may be eligible for future distributions, but those would be subject to future distributions, and it depends on whether or not there's going to be any money left for future distributions. The bottom line here, I think, is be very careful about rejecting that money and sending it back unless you're absolutely certain you're not going to be needing to use that money for legitimate purposes through the pandemic. Well, what about returning PRF payments? Along with that FAQ I just mentioned, the government has said that a provider may not return a portion of a provider relief fund payment. So if you got the $100,000, you think you're only going to need $700,000. The government says you can't just send back the $300,000. You would have to send back the entire tranche. Again, that doesn't make much sense. My advice to my clients would be no. You don't know exactly what your expenses are going to come down, especially with the additional surges that are coming out right around the country now. Go ahead and keep the money, and we'll true up at the end of this thing after the pandemic's over. We'll see whether or not we had any expenses that need to be turned back. The government will issue future guidance concerning how you return those unused funds in the future. If you do want to return PRF payments, and if you have not attested and it is still within the 90 days of the receipt of that information, then the way you return those PRF funds depends on how you got them. If you got them electronically, then you work through the ACH process and your financial institution in order to return those funds. If you received a paper check, then you should reject the payment in the Attestation portal. If the check is not deposited, you simply destroy the check. If the check was deposited, you write the check and send it back to United Healthcare Group. What about if you already attested and received the funds, but now you want to reject the funds and retract the attestation because maybe you realized that you're not eligible because you did not provide COVID-related care on or after July 31st, 2020. Well, in this situation, if you need to change or retract your attestation and return the funds, then you call the provider support line and they'll guide you through that. But remember, once you reject the funds, you cannot change your mind and receive the funds. You may be eligible for future distributions if and when they become available, but there's no guarantee. So if there's any doubt, my advice would be to keep the funds and return it at the back end after this thing's over. If you do return funds, it'll go into the pot, and HHS will allocate return payments for future PRF distributions, but we don't know exactly how that's going to work. So don't count on getting back any money that you may have turned back in. The other side of this is stay tuned. If you've got money and it's not going to be enough to cover the expenses you're going to have, make sure you monitor the government's website and the potential for future distributions, because it may be that you would be eligible for future distributions. What about transferring the PRF payments between affiliated entities? Well, the government has said that generally you can't transfer the PRF payments that you receive to another entity. It's based on the TINs that came in. Now, there's an exception to that. If you're an organization, the money comes into a member in that organization through their TIN, then you may be able to allocate that money, share that money with subsidiaries. But you would just need to make sure that those subsidiaries who are getting that money, that they still are going to comply with the terms and conditions. The use of that money still has to be for COVID-related expenses. So you would want to make sure that that distribution throughout the organization goes to those entities that are going to use it for the COVID-related expenses. But that only applies to the situations where they're affiliated entities. What about if it's a situation where there was a sale from one entity to another? In that case, the government has, again, made it pretty clear that the recipient seller, the person, you have a situation where the seller received the PRF payments, they can't transfer those funds, those PRF payments, to the buyer if it's an asset sale. Those funds were intended to go to the entity that provided the services in 2019. They're the entity that's entitled to keep it. They can't simply turn that money over to the buyer. Instead, the guidance is that they would have to, the seller could keep and use the money as long as it itself had appropriate uses for it and otherwise complied with the terms and conditions, but it can't transfer those PRF funds over to the buyer. The buyer, on the other hand, could apply for future distributions, but it cannot just simply assume or accept the money from the seller. So these COVID funds generally are not transferable, except in the situation of affiliated entities like parent and subsidiary type situations. All right, that's a general overview of the PRF funds and kind of the rules that we have so far of how you use those funds. Just so you know, the government's in the process of distributing an additional $15 billion to eligible providers who were not eligible to receive the general distribution funds and did not receive any of the general distribution funds. So maybe it's providers who are Medicaid or CHIP providers. Because the general distribution was based on Medicare fee-for-service, they didn't get any of the general distribution funds, then those entities may participate in this next round of funding. It only applies to those entities that were not eligible for and did not receive any of the $50 billion in the general distribution. If you receive money in the general distribution, then you are not eligible to participate in this next round of Medicaid CHIP distributions, even if you're a Medicaid or CHIP provider. If you did not participate in the general distribution and you want to participate in this Medicaid CHIP distribution, then you've got to submit your application by July 20th, 2020. You go into the Attestation portal and it will guide you through the process. I'm not going to go through the additional requirements here because these are pretty specialized entities and you probably know whether or not you're entitled to those Medicaid CHIP funds. All right, let's talk about enforcement. Significantly in the FAQs that came out, the government has said it does not intend to recoup PRF funds that were paid out as long as the lost revenues and the expenses that are COVID-related that they suffered were greater than the PRF payments received. Even if you received more money than you thought you were entitled to, as long as your lost revenues and expenses that were COVID-related were greater than the PRF payment that you got, and you otherwise comply with the terms and conditions, you can go ahead and you can keep the money, okay? On the other hand, if you don't comply with those terms and conditions, then at some point you're going to have to return whatever you can't use. The recipients are going to have to demonstrate the proper use of those money. That's going to be through your own documentation and making sure that you maintain the documentation you need to support yourself. HHS will have significant anti-fraud monitoring of PRF patients. They've already said that they're going to be involved in, they're going to be able to get money, be able to evaluate your use through the reporting requirements. You're going to have to submit the reports. They'll conduct their independent audits. In the OIG's work plan for next year, they've already outlined that use of the PRF funds is going to be a major focus for the Office of Inspector General. They could use risk assessments and data analytics to evaluate whether or not you use the information or use the money appropriately. You also have to be concerned about whistleblowers. Under the False Claims Act, whistleblowers who and maybe a disgruntled employee that you let go or they think that you're using the money improperly, they can go to the government and they can turn you into the government, and they may be able to recover a portion of the cost that the government recovers. So even if you think you can hide the wrongdoing from the government through your reports or the audits and things like that, you have to be concerned that your employees may find out about it and they may turn you into the government. Well, what happens if the government thinks that you've acted improperly? Again, you could be subject to civil, criminal, administrative penalties. That can include, they've already warned you in the terms and conditions, it could include the revocation of Medicare billing privileges, exclusion from federal health care programs, which is kind of the death knell for participating in health care in the United States, at least as an employee or on behalf of others. It can also result in fines, civil damages, and imprisonment. For example, the False Claims Act, if you are making false statements when you're submitting that attestation or when you're submitting the reports to the government, that can result in False Claims Act liability. That, at the very least, requires you to affirmatively report and make repayments to the government. In addition, the government, if you fail to timely report and make repayments that are due, the government can impose additional civil penalties of up to $23,000 per false claim that's submitted. If you fail to make the report and repayment within the required time, it can give additional penalties. You can be liable for treble damages, which could be 3 times the amount that you receive from the government through these payments. You could be excluded again from the federal program, and you could be subject to these key TAM lawsuits by disgruntled employees or competitors or others who turn you in for misuse of the federal funds. Those are civil claims that could be brought against you. Those won't put you in jail, but other violation of other laws could land you in jail. The government has a whole list of federal fraud claims associated with health care that they could come after you, and those can result in prison terms as well as criminal fines and penalties. So you need to take this stuff seriously. So here's my kind of summary of some things that you can do to make sure that you remain compliant, that you don't get crossways with the government in using all this money that the government has been sending to you. First, make sure you carefully review your PRF attestation to ensure it is completely accurate before you submit it. If you have already submitted it, you may want to go back and look at it to make sure that it's still accurate. You may want to review the amount of money that you received against the HHS list of entities receiving PRF payments. As I mentioned, the government has posted, one of the strings that's attached with accepting this money. You agree that the government can post your information on their website. So you go to this website that's on the screen, and it will identify you as a recipient of PRF funds, and it will list the amount of money that you've received. You may want to check that and make sure that the government's the amount that the government thinks you received actually tracks what you think you received, so that you can align your accounting so that you can justify the amounts that you've received. You need to make sure that you review and understand the terms and conditions and the other information that's maintained on the PRF website. And this is not a one-time event. As I mentioned, the government's kind of making this up as it goes along. So these FAQs are updated on a regular basis. You should periodically monitor that to make sure that you're aware of any changes and so that you can remain compliant. You need to train your key personnel concerning the requirements. These would be anybody who's going to be involved in accounting for or spending those funds or making decisions concerning the use of the funds. That would be your administration and decision makers, your accounting, finance, and billing people, facilities management, your supply, central supply or other suppliers, people in charge of purchasing supplies, human resources, compliance personnel, and others who are involved in making decisions or accounting for or using funds that may have a COVID-related purpose. You need to update these personnel concerning any new guidance is issued to make sure that they're aware of any changes so that they can ensure ongoing compliance. And you should document the training you provide to them so that if there is a problem down the road, you can come in there and show, hey, we may have to repay, but we're not liable for intentional fraud because we provided the training. We did everything that we could. You need to develop appropriate processes to identify and track COVID losses and expenses now. Don't assume that when the government gets around to issuing its requirements for reports, or for, in worst case scenario, the government decides to come in and do an audit or bring an action against you 2 or 3 years from now that you're going to be able to go back and recreate everything that you did, every use. You need to be tracking and monitoring that stuff now. So you need to develop appropriate processes so that you can identify and track those COVID losses and expenses now as you go along, that you flag those as being appropriate for use for these COVID payments. Things like the equipment and supplies that you purchase, facility construction and retrofits, employee and staff-related expenses that are attributable to COVID, training that's applicable to COVID, contracts for items or services, lost revenue, cancellation or suspension of services, uncompensated care, or other expenses that could be linked or are due to COVID, so that you make sure that you've got the documentation you need to support your use of funds. Again, that's going to require that you involve others in your organization, those others who are making those decisions, who can track those COVID-related expenses or losses. Then you're going to need to work with your accountants or accounting people to establish an effective process for using or allocating those PRF funds. You may want to consider establishing a separate bank account where you use those or place those PRF funds and then only draw on those funds as you make sure that you're using them for an appropriate COVID-related expense. To that extent, you should have some kind of approval process for any expenditures for that account to ensure that they are going to be used to prevent, prepare for, and respond to coronavirus and cover healthcare-related expenses or lost revenues that are attributable to coronavirus. That's the test. So you want to have some kind of a gatekeeper or process so that any money that comes out of that account, the PRF account, is going to be used for these purposes, and you're going to be able to support it by appropriate documentation for each of those expenditures. You're going to want to prioritize your expenditures, right? The COVID fund may not cover everything that you have. You're going to want to use the funds first for the things that are going to be clearly COVID-related, right? So be safe. Use the funds first for the stuff that there's not much dispute, the things like purchasing PPE, supplies, those types of things. When you start to get into more of the gray areas, then you're going to have to look closer. But use the funds first for those things that are clearly COVID-related, and then look closely at other expenses as you go along. You're going to want to track or trace all the expenditures so that you can link it back to a COVID-related expense. You're going to want to document your COVID-related purposes for the expenses. If there's any question on the invoice or on the bill or anything like that, make sure that you have documentation to justify each expense that goes out of that COVID fund. You're going to want to maintain invoices, receipts, the payments, etc. Also, you need to establish your pre-COVID baseline revenues while you have the data. Remember, the funds can not only be used to cover your expenses, the purchases and the things like that you have to do for COVID, but it can also be used to cover your revenue losses that are attributable to coronavirus. So you need to be establishing your baseline now. Those are things like, what are the budgets for 2020 that were shot to heck right now because of the COVID stuff. Make sure that you have that in place. Make sure that you have the data comparing 2019 to 2020 so that you can show those lost revenues and link it back to coronavirus. That's stuff that you should be gathering right now so that you've got it in the future, so that you don't have to go back and try to recreate it down the road when the information may not be available. You should document the lost revenue due to COVID as you're going along, including things like decreased patient volumes, cancellation or suspension of elective surgeries, and the like. And then track your use of PRF funds to cover those expenses. Again, if you're putting your PRF funds in a separate bank account, make sure that you have a justification that you're taking that money out to cover these expenses that are related to lost profits or the like. Beware transferring PRF funds to other entities or other subsidiaries. You need to make sure that whoever you're transferring it to, that it's appropriate and permissible under the PRF regulations. That it's generally you can do that within affiliated entities as long as the recipient can still comply with the requirements, that the money that goes to them is still going to be used for a COVID-related purpose. If you are going to transfer it to an affiliate or a subsidiary that's permitted under the rules, you're going to want to make sure that that affiliate or that subsidiary is going to use the funds appropriately and going to maintain the documentation you need in case the government wants to come back and say, okay, how did you use that money? You need to make sure that you've got that to protect yourself. Again, prevent double dipping. You can't use the PRF funds if those funds, the expenses, were covered by some other program or reimbursable by another source. So if you do have funds that are earmarked for a particular purpose, use those funds for that earmarked purpose first, right? Because that way you can maximize the use of your funds. So use the funds for the things that must be used for first, and then you can use the general distribution of those other things for other related purposes. Beware other programs such as PPP, payment for the uninsured, payment for COVID testing, or other programs you may be participating in that are going to pay you. If you're getting the money from those other funds, then you can't use the PRF funds for those services. Make sure you recently exhaust other reimbursement sources before using the PRF funds, and then track the use of those expenses and funds so that you can show that, now, these payments came from this source of funds, not that source of funds, so that you can show that there was no double dipping as you go along. This is going to require a lot of work from your accountants. You need to make sure that you maintain the relevant documentation to support your reports down the road. Remember that it's quite possible that it may be years before you're asked to support what you did. But when that time comes, you need to make sure that you've got that documentation. So don't get lax. Make sure that you're supporting that information now and that you're maintaining those records so you got it when you need it. Among other things, you should document and maintain copies of guidance from HHS that you relied on in making the use of the funds. As I mentioned, the government's kind of making this up as it goes along, and every day or every few days they're modifying those FAQs. Now, sometimes the government takes down prior guidance and replaces it with new guidance. Well, if you acted under the prior guidance, you need to make sure that you maintain copies of that prior guidance so that you've got the justification you need in order to support your actions, because that guidance may change. It may no longer be available on the government's website. Similarly, if you happen to call United Health or HHS to get specific guidance and they tell you what you did or what to do and you relied on that, make sure you maintain that documentation of that guidance so that you can support it, your action, if the government ever comes back to question you. You need to implement and update your record retention process to make sure that you've got the records that you need. As I mentioned, you generally have to ensure those documents are retained for 3 years from the date of the last expenditure. So you need to look at your record retention policies to make sure that all of those documents you're going to need are going to be around when you need them, at least 3 years down the road. You're going to need to timely complete and submit all reports consistent with the HHS guidance, including making sure any statements you make in there are 100% accurate. If you fail to, then it could result in a False Claims Act. You should establish a procedure for completing and reviewing those reports, including involvement of the relevant personnel who can attest that the proper uses were made of the information, and you should monitor for updated guidance concerning the reporting requirements. Again, we don't have those reporting requirements yet, so we need to stay on top of that and watch for those as they come out. You're going to need to implement procedures to comply with the balanced billing prohibition. Again, that's the one that says that if you're providing care for a presumptive or actual COVID case, and the patient's out of network, that you can't charge them more than an in-network patient would have to pay. So you're going to have to develop processes in order to handle that. That means you're going to have to link in your billing and coding people so that you're flagging those cases and working with them to ensure that you are balance billing appropriately within the guidelines that the government has set. You need to monitor compliance as you go along. That means you should involve your compliance committee. Don't assume that you put in place now, but people get lax over time. You're going to want to periodically review this every few months to make sure that you're staying on top of the compliance issues. You need to monitor the HHS website and other sources for additional guidance as it comes out. You might sign up for industry organization websites, things like that will alert you to the guidance as it comes out to ensure that you can comply as you go along. And eventually, you're going to have to return any unused PRF funds as appropriate, so be careful about using those funds for anything that is not appropriate, because you may have to pay back the money. Now, you may take some comfort in the fact that the DOJ and the OIG is unlikely to seek penalties based on ambiguous or unclear guidance. The FAQs that came out as sub-regulatory guidance, and at least most recently, the DOJ has indicated that they're not going to take action under the False Claims Act for sub-regulatory guidance. But, be careful, because to the extent that you are making affirmative representations in your attestations or your reports, then they still could come after you for fraud or False Claims Act there. That is a brief summary of where we are with the PRF payments, so what are the permissible uses and the guidance that you may need. There are other programs out there. We didn't cover them today. Most importantly, it's for you. There is the HRSA program that allows you to get compensated for care to the uninsured for COVID-related care. In order to participate in that, you have to go to the HRSA website and you have to apply for that. There are other programs that are out there. If you have any questions about any of the stuff, feel free to shoot me an email, and I'd be happy to respond offline. Otherwise, it's 1 o'clock, so I think that's it. Thank you very much, and good luck as you go forward in this brave new world that we seem to find ourselves in.